What's up, Zero Tax Club? Welcome to Money is a Mind Game, the podcast committed to blowing the whistle on Wall Street's BS and increasing your financial IQ. So pull up a chair and have a seat at my table. Take out your notepad and a pen. I am your host, JP Tatum, the tax-free OG, and this is Tax-Free Tuesdays. Let's get it.
All right, and welcome back to Money is a Mind Game. Today's topic is, what is wrong with a job? What's wrong with it? What is wrong with a job? Well, what's wrong with getting a job? Working hard, saving money, buying a house, getting out of debt, and investing for the long term in a well-diversified portfolio of stocks, bonds, and mutual funds. In one word, taxes. That's my short answer, taxes. Now, the longer answer is more along the lines of the harder you work, the more money you make, and the higher percentage you pay in taxes. There is no tax relief for hardworking employees. There just isn't. The primary way to pay less in taxes is to earn less with that strategy. If you want to earn more and pay less in taxes, you need to change the type of income that you work for. What are you talking about? Well, there's three types of income. And the three types of taxes for the following three types of income are as follows. Ordinary income. It's the highest taxed income. And ordinary income is your job, your W-2 income. Portfolio income is the second highest taxed income. That comes from, as we call in the capital gains. So if you trade often, whether it's options, equities, whatever it is, you flip houses, those are all capital gains type things, meaning you buy low, sell high, or you sell high, buy low, which is like when you short a stock. So portfolio income is the second highest taxed income. Third is passive income. That is the lowest taxed income, possibly zero. So of these three, which one would you like? Which one sounds the most appealing? Unfortunately, many of us will pay the government a zero interest loan. I know you don't think that's what you're doing, but when you put the max for them to take out of your paycheck, you are giving Uncle Sam and Auntie Samantha a 0% interest loan on your money. And then you're so happy when they give it back to you. I mean, it's hilarious. So some of us said, well, it's because I don't want to owe. I don't want that problem. Maybe you've had an issue before. Get a better tax advisor. But don't willingly take food out of your baby's mouth to give to God knows who or what. Like, you're the best client. Like, would you run your business that way? Would you loan me some money for 0% interest for a whole year? I mean, at 0% interest for a whole year? And then just let me give it right back to you and be like, hey, that trade worked out really well. Here's your money back. And I kept all the profit, because trust and believe, when I had your money, I was using it to make me more money. So think about that. Now, with ordinary income, people who have a job or are self-employed work for ordinary income. People who save money have their savings work for ordinary income. People who get out of debt pay off their debt with ordinary income. People who buy a house pay for that house with ordinary income. People who have traditional retirement plans, such as the 401k in America, have their retirement work for ordinary income. And you know what's worse about this is you do everything right according to the American way, and you save your butt off. You pay off your debt, you do all these things, and for some it works out, but they do miss out on opportunities, and some people are okay with that. Others feel like they're being taken for a ride. You know, you put all your money in this 401k, you saved up to the proverbial $1 million or more. You're super excited. You feel like you're on track for retirement. In fact, you know you are. You're excited. Here's the problem. There are so many things you did not consider. If you didn't hear the 401k as a scam, go back and listen to that one. But here's some things I'll add to that. So you saved, again, you got up to the proverbial $1 million, 500,000, whatever it is you think you will need, or your trusted advisor told you would need at a minimum to maintain your standard of living. Here's what we didn't talk about: taxes. It makes no sense to save all of your money in a tax deferred bucket of any kind, period. Because when you go to take that money out, you will pay taxes at the highest rate. And since you have no idea what taxes are going to be when you retire, how could you possibly plan? How do you even know? So what your advisor then says, oh, that's why you got to be a little bit more risky when you're young, da-da-da-da. Bullcrap. That's not the way it has to be. That's not even the way it should be. And I don't really like the word should, but that math does not pencil. When there are better alternatives to the 401k that can get you results, guaranteed results, tax-free. You feel me? So 401k is not the end-all be-all. And I definitely would not recommend you work that hard to save into that vehicle for a hope and a wish. The 401k is a hope and a wish. I hope I save enough so that I can retire one day, and I hope that the money lasts long enough for me, and I hope that maybe there's some left over for my heirs. A hope and a wish, because you have no idea what taxes are going to be. You have no idea how much income you're going to have. You have no idea about something called provisional income. What? What did he say? Provisional income. This is something they don't teach you. I guess I should say something else. Provisional income, folks. So, again, same example. You did all the right things, saved in the 401k, made a milli, right? You're a millionaire on paper. Not really, but on paper, unless you did it a couple times over. But anyhow, now you're definitely withdrawing more than $44,000 a year. If you're married, 34 if you're single. Well, guess what? I bet you did not know that if you're withdrawing that amount in a year, that it impacts your Social Security at 85%. So, for those of you who are looking forward to getting some sort of Social Security, imagine 85% of it being taxed just because you did what you were supposed to do. How is that fair? And why don't they tell you that when they tell you to save in your 401k? Hey, we have a match, but don't save too much, because if you do, it's going to impact your Social Security. Did they tell the baby boomers that? Baby boomers are finding that out right now. So I'm trying to help the rest of us not even have to worry about it. How about if you didn't even care because you were set regardless? How about Social Security actually is around by the time, we're of age, but you saved in such a powerful way that your income that you're receiving on a regular basis is completely tax-free and has no impact whatsoever on your Social Security benefits that you actually do receive. Maybe you like to go to casinos. Maybe you want to spoil your grandchild. Don't know, don't care, but you know that you want to collect because you paid into that thing. So you're like, wow, it's actually here. Yeah, I want my check. Run it. But how cool is it to know that you'll get it and you've already been living off of six figures and you have that for the rest of your life and your family is set up, period. Anything happens to you, millions come down the line. You're always 5 to 10 steps ahead. And you still pay no taxes. I mean, come on. You get my point? Like, people who follow Pavlov's dogs, Pavlov, the dog, the scientist who trained the dogs. That's what I call this, Pavlov dog's financial training. Get a job, save money, buy a house, get rid of debt, and invest in traditional retirement plans. Pay highest taxes, even if it's their money that's working for them. I mean, come on. The harder you work for money, the more you pay in taxes. The harder your money works for you, the less you pay in taxes. And the harder other people's money works for you, the less you pay in taxes. In fact, you may end up paying nothing, nada, zero. Without financial education, people, most of you are going to work for ordinary income. And so will the money in your savings and in your traditional retirement plans. You will pay the highest taxes possible on your labor and your money. with little financial education, at least your money could work for portfolio or passive income. And that's income that's taxed at lower rates. The question is, how many of you are actually willing to get the education? Just start reading. A couple book recommendations coming right at you. The Cash Flow Quadrant, a very good one. Rich Dad, Poor Dad, another great one. Legendary book. Raise Your Financial IQ, another one. All of those are by Robert Kiyosaki. And all of those are excellent. Excellent. And when I say excellent, I mean excellent, because it will have you thinking. It's not traditional garbage stuff that you hear every day. If you're hearing it every day, yeah, I know, put money in my 401k, then stop listening to it. If you're reading things that support that, don't read those things. Read things that challenge the status quo. That's how you get ahead. Do you think 85% of the CEOs who are making millions of dollars a year are putting money in a 401k? Ask yourself. Well, why is it good for you if it's not good for them? What are they doing? You got to think, guys. We have to be vigilant and diligent about our own financial success. If you really want it like you say you do, let's get it. But many of you just say you want it, but you don't really want it bad. You just kind of want it, in the words of E.T. So that's my podcast for today. I just wanted to kind of break some things down and share, what's wrong with the job. I know people beat up on jobs. If you want to be one of those people who just, work your job, put your head down, that's your thing. I mean, great. I mean, everybody that's an entrepreneur needs employees, so no shade, However, you can work a job and still be financially savvy. You can do something you love and find other ways to reduce your tax liability powerfully. That's what I do. That's what I help people do. Work the job, love it, but you don't have to be a slave to it. Wouldn't you prefer to work that job because you want to, not because you have to? Nothing's wrong with the job per se when you look at it from, hey, I'm doing this because I want to, and my money, every time I get paid from this place, goes towards my dreams. It goes into my investments. It goes into me paying less taxes. I started this company over here, so it lowered my tax liability. I have a couple rentals, again, creating passive income for myself. I'm investing for the long term in a PRA, which is setting me up for my retirement, for income. So I got about 6 different things going on. Yes, the source of that money originated from said job. That's the only thing a job is good for, in my opinion. To give me the money I want to go do what I want to do. But the problem with the job is taxes. Like I said, short answer is taxes. If you can figure out a way to leverage your job and your expertise and your paycheck into something magical, great. And it's really bad for those of you who have higher incomes. You're making 6 figures or more and you're just socking it all away in a 401k. I feel sorry for you. If you are not doing that and you're setting it all in your savings account because you don't trust the market or whatever, I feel sorry for you because you're still taking risk. There is risk to both. Risk to investing, there's risk to not investing. And then there's the PRA, private reserve account, rich man's Roth. That is one of the most sexiest vehicles I've ever come across. That's right, I said sexy. And in my opinion, the most powerful I've ever seen. And I've been in this business over 10 years and I've never seen anything like it. But here's why. It wasn't part of the circle. You had to be at a certain level to know about this type of vehicle. And so I'm blowing the whistle. That's what I promised you I would do on this podcast. I would blow the whistle on Wall Street's BS. And when I find out what the 1% are doing, I'm coming right back here and I'm sharing it with you. It makes sense for you now. It didn't make sense, or it wasn't available, or you didn't know about it because you don't have people that are in those circles. Well, you got a person now. I'm in a certain circle. I'm privy to a certain group of people who, literally work with me, who I work with them, their friends, etc. But when I tell you I'm in this room and I'm just absorbing and I'm listening and I'm thinking, why don't we know about this? Why don't we know about this? And the truth of the matter is, we don't want to know. Because it takes nothing for us to Google, what the Kardashians ate for breakfast. But to actually put some time into creating a financial plan, boo. Who wants to do that? It's boring. But those are generally the same people who later on in life are miserable. So you got to decide what side of the fence are you on. Do you want to stay on the left side of the quadrant forever, which is the employee side, self-employed side? Or do you want to stay get on the right side of the quadrant, which is the B&I side, business or investor side? Make a decision and then commit and don't look back. It comes with a price. The price might be, instead of going out on Saturday, you go into a workshop. The price might be, instead of watching Housewives of Atlanta, you finish a book. Maybe that's the price. But are you willing to pay the price? As a man, when you tell your wife, baby, we're going to get all the way. I'm going to make so much money, or we're going to be set. I'm going to buy you that house. When you make those promises, young man, how serious are you about making them come to fruition? How? Are you willing to do whatever it takes? Or are you going to look at your son someday and just say, yeah, I tried that. When you tell your son, I want you to be better than me. Why? I am the man I want my son to be, and growing. I don't have to hope he's better than me. I'm showing him exactly who he should be, or some version of it, right? He's still his own kid. He's going to be his own man. But I got to tell you, man, best day ever when my son was like, Dad, you're my hero. I want to be a businessman like you. What? That's cool. That's amazing. I didn't prompt him to say that either. I was actually shocked. Because sometimes I feel like I'm really hard on him and I make him think about things his friends aren't thinking about, and he's so young. But I'm planting seeds. I'm doing it on purpose. This is how, the others do it. They start breeding them early, teaching them the family business, teaching them the language of finance, so that my son, who will be, a strong young black man, he will understand the language of finance. He's not going to be intimidated by a conversation about money. He's not going to be weird about people when they want to talk about money, because that's all we talk about, right? He's comfortable with the conversation. He won't go to sit down with a financial advisor or some banker and have them use some words like asset allocation to throw him off. His tree will not be shaked or shook. He can stand on his own and throw some words back at them, and they'll be like, they need to pull out their financial dictionary. Maybe he'll challenge the terms that they're giving him and say, well, that doesn't work. That math don't pencil. And he'll come up with a better plan. Maybe he'll be an expert at raising capital, so he won't ever need a bank. If you can become an expert at raising capital for anything, you become known as the money guy or the money gal. And anytime someone needs money, they'll come to you. And if you can make a living off of that, God bless you, because that's a very lucrative way to get paid. Got to tell you. All right. Well, I don't want to keep ranting because sometimes I get excited and I'll just go all the way around. So thank you for spending the last few minutes with me. Money is a Mind Game. JP Tatum. This is Tax Free Tuesday. Again, email me if you have questions. Leave comments. I would love to tackle any subject matter you have. And again, as always, I throw the challenge out there. If you have a financial plan that's better, if I can't improve it within the first 5 to 10 minutes, then, stick with what you got. But there hasn't been one I haven't been able to improve at all. Because most people do leave out taxes because they think their CPA is going to tell them what to do with their money from a tax perspective. And I will promise you that they cannot, will not, and do not, because that's not their lane. They can tell you what form to file this year, maybe how to save this year, but as far as how to get your stuff together for the future, I'm your man. So again, JP Tatum, the tax-free OG from Tatum Financial. Have a good one.